If you've been thinking about getting an SBA loan for your business, there's something important that changed recently, and a lot of people haven't caught it yet, which is a problem because the SBA loan process isn't exactly quick. You're gathering tax returns, financials, bank statements, maybe talking to a lender for weeks, and then somewhere along the way, someone says, hey, actually, you don't qualify. That's usually not a great moment, especially when the reason has nothing to do with your revenue, your credit, or whether your business is profitable. It comes down to one specific eligibility rule that changed in March of 26. Stick around, I'm going to walk you through what changed, who still qualifies for SBA loans, and what your options look like if the SBA route doesn't work for your situation. Now listen up. We all know SBA loans are still one of the best financing tools available to small businesses. Low rates, long repayment terms, predictable monthly payments. There's a good reason they're so popular. But the ownership requirement recently got tighter. Previously, businesses could qualify if the majority owners were U.S. citizens or permanent residents, also known as a green card. Now the rule is stricter. For most SBA loans, every direct and indirect owner needs to be a U.S. citizen or national, which means even a small ownership stake by someone who isn't can create a problem. And a lot of business owners don't realize that until the lender starts digging into the ownership structure during underwriting. Now, beyond that change, the rest of the SBA picture looks pretty much familiar. Lenders are still looking at things like your credit history, cash flow, whether the company can realistically support the loan payments. And when SBA loans work, they work really well. You're often looking at a 10-year repayment terms, sometimes longer depending on the purpose, which spreads payments out and makes larger investments in the business a lot more manageable. But here's the key takeaway. If the SBA loan doesn't fit your situation anymore, that doesn't mean funding is off the table. It just means you may need to approach it in a different manner. Plenty of businesses grow using structured term loans, working capital lines, equipment financing, even acquisition financing, depending on what they're trying to accomplish. The important thing is figuring out what path actually makes sense before you spend months chasing the wrong one, because the worst outcome isn't getting turned down. The worst outcome is spending 2 or 3 months chasing a loan you were never eligible for in the first place. So if you're exploring SBA financing right now, or you're just not sure whether you'd qualify under the new rules, you can book a quick call with our team. There's a link in the description below, and if you can follow the instructions on the screen to schedule a time, we'll take a look at your situation and help you figure out what options actually make sense before you go too far down the wrong road.